Hello, welcome from Trend Signal for our review of the data and the events at beginning of the week, 15th of January. Holiday in the US on Monday, Martin Luther King Day, so the stock markets, futures markets, derivative markets all closed in observance. Foreign exchange markets, of course, they're all open as all foreign markets are, or overseas markets, Europe, Far East, all open. Volumes will be a bit subdued, obviously, due to the US holiday. The bull market in equities extended further last week, at least it did for North American markets. Dow up 508 points, that's what, 2%. S&P up 43, that's what, 1.6%. But the DAX and the Nikkei, certainly the DAX, down 143 on the back of a very strong euro, rallying sharply against the dollar following Merkel finally agreeing the new coalition government mix, as it were, down 143 points last week. The DAX, that's just over 1%. I guess it's partly down to German heavy industry. Autos will feel the chill wind of a three-year high in the euro, which is obviously not to their liking. But the euro last week, that rallied 176 pips, or about 1.5%. Sterling also joined the party to a certain extent, up 1.6 cents against the dollar. That's what, 1.2%. The yen also strengthening against the dollar, 220 pips, about 1.8%. So some big moves there. And I think the euro was bolstered also by the ECB meeting minutes that revealed that the European Central Bank is becoming more confident in the economic expansion in the Eurozone. So there we have it. Data this week, let's have a quick look at the calendar. It's again a little bit sparse, but there are a few other things going on as well, which I'll touch on now. So we obviously start the week, as I've said, with this holiday in the United States on Monday, the Martin Luther King Day. Tuesday, well, the main event for sterling markets, in fact, the sterling markets, probably the main event for the week, will be the inflation data, or the consumer price index. Last reported at 3.1%, but there's a general feeling that we are will be topping out on the inflation reading in the first quarter. Although with the strength in in oil generally, US and UK oil, you'd wonder how quickly that weakness will become apparent. But we're expecting a number of 3% on Tuesday morning for the inflation reading. We then jump to Wednesday. In fact, Tuesday we also have this North Korean crisis summit in Vancouver. I'm sort of glossing over that a little bit. It's attended by foreign ministers from 15 countries or so, but the problem is that there is a notable absence in China, which means that the summit probably won't amount to much. China being the most important cog in the machinery, as it were, in terms of getting some sort of progress on North Korea, being one of North Korea's on their border, which basically means that without their agreement to any action, I think it's unlikely that we're going to get much out of that particular summit. Q4 earnings as well on Tuesday. In fact, much awaited bank results. We've already had a couple, but the big heavyweights chime in Tuesday. We've got Citigroup, Goldman Sachs and Bank of America on Wednesday, and Morgan Stanley on Thursday. Wednesday, very important, Bank of Canada, their monthly policy meeting. We're expecting a rate rise. They tend to follow the US. 82% of participants are expecting a rise in the interest rates in Canada. It really depends on what the Bank of Canada says about future prospects for rates, as opposed to the actual announcement, which I think is, as I said, pretty much nailed on. And what they do say about the future prospects will have the greatest impact, obviously, on the Canadian dollar. Also on Wednesday, we have the new Catalan Parliament sitting for the first time since those elections in December. The pro-Catalan Independence Party, which mustered 47.5% of the vote in that election, are expected to form the government and also re-elect Carles Puigdemont as president. And this is the character who's holed up in Brussels and facing immediate arrest if he returns to Spain. So quite how he's going to run his presidency from Brussels is up to anyone's guess there. But that's up to him how he does that. On Thursday, we've got a very important number out. This is the fourth quarter GDP reading for China. Expected to come a little bit softer from Q3 at 6.7%, but remember this time last year the forecasts were for a 6.5% growth target this year, so even a number of 6.7% will hopefully, comfortably I should say, exceed the full year target of 6.5%. But nevertheless it is slightly slowing from Q3. We also have industrial production as well due out in China, which will be unchanged from the previous month. Thursday, we've got the delayed crude oil inventories. Crude oil touching $70 a barrel on Brent. A number of factors: the Iranian situation, the situation in Yemen, pipelines in the North Sea, having to have cracks repaired, a number of things, record low temperatures in North America, and I think whilst all this is going on, the shale oil production has been ramped up. An article in the FT refers to the higher the prices go, the harder shale producers pump, which I think is fairly obvious to everyone, but it's extraordinary how much of the capacity that OPEC have taken off the table has been replaced by shale. But certainly they've achieved part of their aim, which is to have try and reduce this massive overhang of supply, which has resulted in this price rallying substantially over the last 3 months. Testing times more $70 though. We'll have to wait and see how that goes. Other data this week. Well, the crude oil inventories actually is delayed because of the bank holiday on Monday, but it would normally come out on a Wednesday, but it's Thursday. We are looking for a further drawdown in inventories in the US. And we finished the week finally on Friday with retail sales out in the UK. Bit of a pullback from the previous month's 1.1% with a negative reading of minus 0.8%. Obviously, that'll affect on sterling markets. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.